Gold continues to hold strong on its way to $2,200 an ounce, and silver just crossed $25 per ounce, closing the gap on the gold-silver ratio from 90 to 87 to 1. And it is expected that the gold and silver markets will remain strong through 2024. Let's take a look at what else made headlines in the economy this week. Before we begin, remember to like this video and subscribe for more economic updates. Many analysts warned that the more inflation dropped, the stickier it would get, and February's Consumer Price Index appears to be more proof of that. The headline measure came in as expected, increasing 0.4 of a point for the month. Year-over-year CPI rose 3.2%, slightly faster than both January's rate and the rate projected by economists. Core inflation, which excludes more volatile food and energy prices, also rose 0.4 of a point in February. Annual core CPI increased 3.8%, 0.1 of a point slower than January's rate, but 0.1 of a point faster than the 3.7% pace economists had been expecting. Shelter costs continue to be among the bigger obstacles to further inflation relief. In February, the shelter index rose 5.7% year over year. Robert Frick, corporate economist at Navy Federal Credit Union, remarked, "With home prices expected to rise this year and rents falling only slowly, the long-awaited fall in shelter prices isn't coming to the rescue anytime soon." Persistent inflation remains evident at the wholesale level, as last month's Producer Price Index made all too clear. On Thursday, the Labor Department reported that monthly PPI rose 0.6 of a point in February, its fastest pace in the last half year, and well above the 0.3 of a point economists were expecting. Year-over-year headline PPI increased 1.6%, which is its fastest pace since last September. Core PPI, which like core CPI excludes food and energy, also came in higher than expected in February. For the month, core PPI accelerated 0.3%, 0.1 of a point faster than expectations, while year-over-year core PPI landed at 2%, also 0.1 of a point faster than projections. Traders are still betting the Federal Reserve will start cutting rates in June, but their expectations aren't quite as overwhelming as they were before this week's inflation numbers. A week ago, traders pegged the chances of a June rate cut at nearly 75%. Right now, that probability is down to 60%. It is believed still that we will see rate cuts in 2024, but the timing is still the question. In other news this week, the Census Bureau reported on Thursday that retail sales rebounded in February after posting their biggest decline in nearly a year the month before. According to the data, sales climbed 0.6% in February, a big turnaround from January's downwardly revised 1.1% drop. It wasn't quite as much of a recovery as had been expected. Heading into the week, Bloomberg economists were projecting that retail sales would rise 0.8%. As Michael Pierce, Deputy Chief U.S. Economist at Oxford Economics, put it, the modest rebound in retail sales in February suggests that consumer spending growth slowed in early 2024. Finally, we learned this week that the nation's small business owners are still struggling to maintain a positive outlook on the economy. On Tuesday, the National Federation of Independent Business revealed that its Small Business Optimism Index declined 0.5 point in February to 89.4 from 89.9 in January. Now at its lowest level since May, the index has come in below its historical average of 98 for the last 26 months. Unsurprisingly, inflation continues to be a significant problem for small business owners, with 23% saying it represents the single biggest challenge to running their operations. That's it for now. Be sure to join us next week as we continue to look at the excitement in the gold and silver markets. This is Devlyn Steele for Augusta Precious Metals, signing out.